Welcome everybody back to today's Market Explained, a four-star media event, I like to say. And I'm Brian Castle, your host. And today we have an interview for our podcast and video series on today's Market Explained. Rather than a market commentary, we'll be back again with a market commentary in another week or so. But we are really blessed today to have a gentleman with us who's super experienced in a particular category of investing that we want to explore. I want to welcome to our show today, Mr. Bill Boscow. Bill is a senior manager at the Manufactured Housing Property Company and a good friend of ours, a good friend of Four Star. Bill, welcome to the Four Star Today's Market Explained.
Brian, thanks a lot. It's great to be here.
Excellent. And you're also here with us in Chicago, in our home city too, which is interesting, and it's great to have you. Bill's Executive Vice President of Capital Markets for Manufactured Housing, and responsibilities include design, implementation, sales, and marketing of the Manufactured Housing Property Company's investment programs. Now, Bill, you've been at the financial industry for about 35 years. Could you tell us a little bit more about yourself so our folks get an understanding of who is Bill?
Sure, of course, be happy to, Brian. As you mentioned, I've been in the industry for a number of years, and along the way, I've had the opportunity to work with some great companies in various capacities. And earlier in my career, I was involved in the insurance and deferred annuity segment of the industry, working with both major manufacturers, by manufacturers, insurance companies such as Prudential, RiverSource, Lincoln National Life. Later in my career, and the reason that we live in the Chicago area is we moved to the Chicago area when I joined Morningstar, which is right down the street from the Four Star Wealth Office. Right. And I spent a number of years at Morningstar working in their strategic accounts group for their large institutions area. So I had the pleasure of representing Morningstar with some really large corporations, with, for example, Prudential, also Aegon, which in the United States is known as Transamerica, Lincoln National Life, and so forth. And then the last third of my career, let's call it the last 7 years, I migrated over to the alternative investment space, which includes sponsors such as the company that I'm currently with, Manufactured Housing Properties.
So manufactured housing, it's a different category. Not a lot of investors are completely aware of what this is all about. But with your background, you've seen a lot of things, and you've gravitated to this segment. So maybe we can talk a little bit about in the manufactured housing industry, Bill, and share with our listeners what that's all about.
Sure, of course. And you're right, Brian, there's I would say a lack of understanding or knowledge regarding what is a very large subsector of the housing industry, that being manufactured housing. And let me just give a couple of statistics in terms of the size of the manufactured housing portion of the housing industry. First stat is 22 million. That's the number of people here in the United States that live in a manufactured home. Second is 8.4 million. That's the number, it's actually more towards 8.5 million now. That's the number of manufactured homes that there are in the United States. Next statistic is 9%, and 9% stands for that's the percentage of the overall single family housing starts that are represented by manufactured housing. So when you consider those statistics, 22 million Americans, 8.5 million homes, 9% of all annual single family housing starts, they're just key statistics to show people that, wow, this is a really important and really quite a large portion of the overall housing industry.
Yes. So that's one of the confusing parts for me, though, and some investors is, aren't all homes manufactured in some way, or they're just built? So why do we call this manufactured housing? Why so?
Great question. So let's divide it into two groups. You have site-built homes, and then you have manufactured homes. So to me, a site, when I use the term site built, that's somewhat, at least in my mind, self-explanatory. The home is built on the site, the foundation where the home resides and is located, I should say. Whereas manufactured housing, and there are a couple of different subsections of manufactured housing, those houses are built in a manufacturing facility. And essentially what happens is you have a production line, whether just like a car assembly plant, you have assembly plants for manufactured homes. You and I are in Chicago. If we drive, not even 2 hours east of here into Elkhart, Indiana, and places like that, that is a haven, a beehive of activity of assembly plants for manufactured homes. So why is that a benefit ultimately in terms of manufactured housing? Well, in a manufactured or assembly plant environment, you have some great advantages. You have efficiency in terms of cost. You have efficiency in terms of speed. You have quality of workmanship, because the people that are assembling the homes, they are very skilled in what they do. They are very focused in what they do. And there are some other benefits as well. For example, in a manufactured environment, you don't have to worry about vandalism, which unfortunately with site-built homes, things can go missing. You don't have to worry about other things in terms of finding subcontractors and so forth to complete the house. It all happens on site, and then that manufactured home is transferred to the site where the home will be situated.
Great. So do the homes come complete as a home, or is it different walls and then they're assembled on site to some extent? How does that work?
Well, yeah, that's another great question. It actually depends. One, let's call it a distinction within the manufactured home area is, in one case, you'll have a totally pre-assembled home. And that home is transferred, again, to the site where the home will be located. In another case, you have, or another part of manufactured housing is called modular homes or modular housing. And in that case, you'll have different components of the home built in a factory, and then those components will be transferred to the site and assembled there. But at the end of the day, both descriptions of the house fall under the overall umbrella of manufactured housing.
Okay. So interesting. So there's a couple different segments, and now we see the distinction between as you say, a site-built home versus manufactured housing, which is built at a site where the scale is there. So I'm getting a sense, is there a cost advantage as well?
Sure, exactly. And before we go there, just one other stat that I like to reference in terms of percentages of people that live in manufactured homes. And the statistic relates to the Carolinas, both South and North Carolina. In South Carolina, 20% of all people that live in South Carolina live in a manufactured home. In North Carolina, that's about 15%. But as soon as I reference those percentages, that's not just a distinction that's the case in that part of the country, the southeastern part of the country. When you look at where we live in Illinois, Michigan, there's a substantial percentage of people that live in a manufactured home. But back to your question in terms of cost and affordability, on a per square foot basis, a site-built home, on average, obviously, will cost about $144 per square foot. And that cost right now, with inflation and so forth, I'm sure has gone up a little bit. In comparison, a manufactured home costs about $73 per square foot. So we're talking 45 to 50% less in terms of the cost of the house. And that's important. When you look from a resident perspective, the residents, two things are cited. Number one is affordability, in that a reason that residents like living in a manufactured home is just that, their ability to afford the house and not be, let's call it, house poor.
Very interesting. Well, good. So what are the largest states for manufactured housing? Is it Carolinas primarily, as you had said?
It's, instead of states, let's call it regions, Brian. The Southeast both, yes, the Carolinas, Georgia, Tennessee, for that matter, Florida. But also, if you take a look at Texas, very large state. But surprisingly, from a climate perspective, a lot of people will have this notion that, gee, manufactured housing is not well suited for the northern part of the states because of the change in seasons, which I'll affectionately call it, better known as winter. But there are a lot of manufactured housing, I should say, is very popular, as I mentioned earlier, in Michigan, for that matter, Minnesota, Maine, other parts.
Mm-hmm. Interesting. Well, great. So this is quite a growth category, and there are more people now, and you believe there will be growth in the category. What does the future look like for manufactured housing?
Sure. We think at our company that the future is very, very bright, and you just hit upon one basic fundamental reason for that, and it's demand. There is no state in the union that has an adequate supply of affordable housing, not any of the 50 states. Therefore, that translates into very high demand for the sector in terms of the population that manufactured housing, for the most part, serves. That meaning the lower income sector. When I say lower income, these are a lot of people that make our overall society go. Policemen, firemen, teachers, you name it, the people that make, and factory workers, et cetera. So there is an extreme demand, yet at the same time, there's a lack of supply, a serious lack of supply in affordable housing, regardless of whether it's manufactured housing or multifamily housing, et cetera. So when you have high demand and low supply, it creates the need, and for that matter, the opportunity for communities like manufactured housing communities to continue to exist, for that matter, but also to be developed as well.
Nice. So Bill, what is life like in a manufactured housing community? Like, describe the day-to-day for someone who might buy a manufactured home. Are all the homes manufactured homes in a community, or is it mixed? How does that all work?
In most communities, Brian, you'll find that 100% of the homes are manufactured homes. Certainly communities exist where, let's say, a minority of the homes may be site-built homes. And a reason for that is, if you look at the history and the evolution of the industry, many times people that began the community, they began it could have been that they had farmland, and they decided to stop farming and instead develop a manufactured housing community. But their house was a site-built home, and perhaps there are a couple of other site-built homes on the overall property, and those houses are still exist and so forth. So when a company like the company that I represent, Manufactured Housing Properties, acquires a community, at times there will be perhaps a handful of site-built homes, but the bulk of the homes are manufactured homes.
Okay. So interesting. So if we're underserved as far as housing in America, how will the manufactured housing industry be able to prosper from that? And what, is this a big component of what will be the final solution for housing?
Well, it's since we are underserved, the need for affordable housing is there, and that's exactly, again, in terms of communities that we own and operate, that's exactly what we offer is affordable housing. And going back to your earlier question, what's life like within a community of manufactured homes? And I've, as you might imagine, being with a manufactured housing owner and operator, I've had the opportunity to visit a number of our communities. And it's interesting when you get into conversations with the residents, and ultimately the conversation will turn, hey, well, why here? Why at Azalea, one of our communities, versus perhaps a multifamily setup, and as far as living in an apartment? And residents continually say, hey, I like the fact that I don't have to share a wall with my neighbors. I like the fact that my kids can go outside and have a yard to play in terms of some land. I like the fact that my car is parked right outside my door versus down the street or in a garage, that sort of thing. And ultimately, if it's a well-operated community like ours, they like the fact that there's a degree of security, the infrastructure is kept up, et cetera. So over 70% of all residents, and not just within our communities, but surveys that are run by what's known as the manufactured housing industry, a trade group, over 70% of all residents cite desirability in terms of living in a manufactured housing community for the reasons that I just referenced.
Okay. So like if we're driving down a highway and we see a home community, is there any way to tell, okay, yeah, that's a manufactured community and that's a site built community? Is there much difference kind of to the naked eye, really?
Yeah, I think it really depends on the community in terms of how well the community is maintained, how well the community is operated. Many manufactured housing communities, when you consider the fact that a branch of manufactured housing are mobile homes, it's pretty easy to identify the fact that, hey, that community that I'm driving by consists of mobile homes.
Right.
And by the way, and whether it's me or you or anybody else uses the term mobile home, it's really a misnomer. And the reason I say that is that the home, once it's manufactured, is transferred on a trailer to the community, and then it's situated and located in that community.
Right.
But rarely, if ever, does that home move again. Simply for the reason that while it could be moved, we see houses that are moved from one neighborhood to another, whether they're site-built houses or mobile homes, it's really expensive to move those homes. Even if it's just a local move of 2 or 3 miles away, that can represent a cost of $6,000 to $8,000. And when you consider that, hey, this is affordable housing, so more likely than not, the owners of that house don't have the wherewithal to move that home. Right. So I digress a little bit there, but I thought it would make sense just to reference the fact that as you're driving by using your scenario, you see a manufactured housing community, it's mobile homes, but those homes probably are in their final spot in terms of location for the length of their life.
Right. So they could be moved, but realistically, they're not going to be moved. Right. They're gonna stay there, and it's a regular community. And that's one of the questions often that folks ask about this term manufactured housing. How does it relate to that mobile home community? And it's really a completely different. It's a full residential community, not just a row of trailers or mobile homes, if you will. They're totally different from that. So, very good. So, Bill, let's take it to the next level then, if we can. So we're investors, and 4-Star, we're an investment advisor firm, and we work with wealthy investors. And so, how does one invest with a manufactured housing company? How can we invest in them, and how do we do it?
Sure. Well, there are a few REITs, real estate investment trusts, Brian, that are focused on the manufactured housing community. So that's one way to do that. A second way to invest would be through a company like ours, and we're not the only sponsor within the alternative investment space. There are other sponsors that focus on the manufactured housing industry, but that's another way for clients such as 4-Star Wealth clients to invest in the industry. Is that, for example, MHP provides what's called a Regulation A investment offering. Regulation A means that it's a public offering that allows people to invest in MHP. It's actually preferred stock. That preferred stock and the offering structure offers the investor a stable coupon. In our case, it's a defined term for that coupon of 4 years. The coupon level is 7%. That 7% is paid on a monthly basis. And then at the end of the 4-year term, the shares of the preferred stock are automatically redeemed by MHP to the investor.
Okay. So that's the way to do it. So the REITs are publicly traded. The Regulation A programs are more private partnerships that need to be invested in. Are there any rules and accreditation required for Regulation A? offering?
There are suitability rules, Brian, and the rules state that from an investor standpoint, to be suitable, that the investment should not represent more than 10% of their annual income or 10% of their overall worth, whichever is greater. So the suitability rules for a public offering, a Regulation A offering, are, I would say, fairly broad or lenient compared to other forms of offerings within the alternative investment state that would be classified as a private placement as opposed to a public offering.
Okay, so in the publicly traded REIT, that would most likely be a share that would trade on an exchange. And so you could wake up on a Tuesday and just say, sell my shares, and you can get out. In the partnerships, like a Regulation A offering, there's not the same liquidity, right?
Right, exactly. So to your point, in the case of our offering, it is not publicly traded. However, there is liquidity available during the 4-year term.
Okay.
Two things. Number one, what's called an optional redemption, meaning that the shareholder chooses to redeem. There would be a schedule. It's almost like a premature or a penalty for premature withdrawal from a bank CD. The schedule in our case is 11% in the first year, 8% in the second year, and 5% in the third year. And then during the 4th year, there is no penalty for early withdrawal. So that's the case with our offering. Other offerings may have a different situation in terms of liquidity that would be available, or let's call it the price for liquidity. One important other point I should bring up, though, is in the case of hardship being defined as either death, disability, or for that matter, bankruptcy. In our case, we will allow shares to be redeemed during that 4-year time frame without any penalty.
Because of death or disability or something like that. Okay.
Correct.
So, but the idea though, even though there are some liquidity features with penalties and things, the idea though is if you go into one of these partnerships, that you really should be planning to be there for a few years and not think of it as something that we can just kind of sell like a stock.
Exactly. And I was just going to bring that up. So you perfect lead in. You're right. In terms of, again, whether it's our offering, which yes, is a public offering, but it really, when you take a look at the structure, or whether it's a private placement offering, the investor should enter into it with the anticipation that, hey, these assets will remain in the offering for a period of time. And that period of time will vary. It'll depend upon the offering structure. In our case, it's 4 years. In other cases, it could be longer. For that matter, it might be shorter. But at the end of the day, the assets that should be committed to what we're talking about here, alternative investment, should be designed for, let's call it, a longer term hold.
Right. And so because we don't have as much liquidity as we would normally have, like with a stock where we could sell it tomorrow, we do get better benefits by being part of that, and usually a better yield. So how does that compare, Bill, like in a publicly traded manufactured housing REIT as compared to a partnership, for example? What's the general scale?
Well, you're right. In terms of when you consider that the investor is committing assets for a longer term, that there's a lot of times people will term it an illiquidity premium. And in our case, or in other sponsors, as I mentioned earlier, our coupon it's actually 7.3%. I misspoke earlier saying it was 7%. And that compares nicely and favorably to other investments, whether it's the real estate investment trust, for that matter, any other shorter term investment where liquidity is available on a shorter term basis. Typically the coupon will be lower, and it varies, Brian, in terms of if it'll be 200 basis points lower. The risk-free rate right now, the 2-year treasury is let's call it about 4.5 up to 5. It varies obviously, but that gives you an idea in terms of the premium that the investor receives in exchange for number one, investing in a focused area such as manufactured housing, but then number two, allocating those assets for a period of time, in our case 4 years.
Okay. So when we design portfolios for investors, we'll talk to some investors in terms of alternative investing, which is illiquid partnerships and such. and to put, a certain percentage. And so if you think of it, Bill, from the perspective of the bucket theory, that if you're going to be spending money, you're going to spend the most liquid money. And then the buckets that are illiquid would be money you'd use many, many years later. So that makes sense, right? Then that money is, you can go for a little better return because you're not going to use that money in the near term, and you know that, right?
It certainly. So there are two thoughts. That number one is the bucket theory, Brian, which you just described very, very well. The other, I think, important consideration for alternative investments is the lack of correlation, or the very low correlation relative to the public markets. And when I say public markets, both the stock market and, for that matter, the bond market. What's great in terms of investment, such as MHP with its Regulation A, is the coupon is 7%. It stays stable over the course of the investment. And as we're all too familiar with, there is a lot of volatility in the marketplace right now. And volatility, by the way, it can be negative, it can be positive. But at the end of the day, volatility from an investor perspective, it really begs the question, hey, am I going to reach my goals, whatever those goals may be, whether it's retirement, college funding, etc. So it's nice to have a portfolio that is diversified, like you say, in terms of the bucket theory, but also diversified from the perspective that you have various assets that are not correlated to each other. That makes for a healthier, more risk-averse portfolio.
Right. So overall, we can probably do better as investors if we're willing to put some money into the longer term bucket and maybe get a little bit better yield, or in other cases, growth and that kind of thing. That makes sense to many investors, doesn't it?
You bet. It certainly does. Anytime that you can either increase your expected return or decrease the volatility of your portfolio, and essentially if you consider the X and the Y axis to move that optimal portfolio to the northwest quadrant, right? That represents higher return, and for that matter, less risk. That benefits the investor. And I should add, in terms of looking at, we've talked about the manufactured housing subsector of the commercial real estate area. That's one, we think, important benefit to look at, or just statistic to look at in terms of manufactured housing. And I'll give you some statistics. When you look at the period from 2010 through last year, 2021, manufactured housing had an average annual return of just over 23%. That compares nicely to the overall equity real estate investment trust index, which returned over that same period about 13%. So that's one part of risk and return. That's the return part that I just referenced. From a risk standpoint, when you look at manufactured housing and the standard deviation, the volatility from one year to another, it comes out to being about 16% in terms of standard deviation, whereas the overall equity REIT index was about the same, 15.6. Mm-hmm. So the point that I'm making here is that you have about the same risk as the overall commercial real estate industry, but you're receiving a higher return in terms of manufactured housing as far as the subsector is concerned.
Nice. Yeah, so it's really interesting. It's an area that most investors have not necessarily looked at, although as you said, it's a growing segment. It's about it sounds like about 9% or so of the homes being built are manufactured homes, and it's growing. It's growing cost-wise, efficiency-wise, and it's become a great category.
Exactly. And in terms of our conversation today, if there's a couple of things that hopefully the people that are watching our conversation come away with, is that number one, manufactured housing is a really large component of the overall housing industry. The demand for affordable housing, which that's what manufactured housing is very, very strong. We think it will only continue to get stronger. The supply is limited. So from an investor standpoint, that's a nice equation, to be involved in an industry where the demand is high, yet the supply is constrained, and we're able to acquire and effectively operate numerous communities in a high growth area of the country, that being the southeastern corner of the United States.
Right. That's really great. Well, Bill, this has been a great discussion. I think we're getting close to the end. Are there any other messages you'd like to send everybody about manufactured housing and investing in this category?
Well, I think we've hit upon the really key messages, Brian. I will bring up one other interesting element of the industry, and that is the fact that it is very fragmented. And what do I mean by fragmented? Well, if you look at those entities, whether they're corporations or others that are involved in this industry, it really runs the spectrum. On one end of the spectrum, you have very large corporations such as Berkshire Hathaway. They own the largest manufacturer of manufactured homes. It's Clayton Homes. They own Clayton Homes. So here you have companies such as Berkshire Hathaway actively and deeply involved in the industry. Also, Sam Zell. I'm sure a lot of viewers are very familiar with Mr. Zell. He is very involved in the industry. Yet then you have the other end of the spectrum. You have literally mom and pop entities that have started and own communities. And those are the entities that our company, MHP, are acquiring communities from. The point I'm making here is such a fragmented industry that leads to inefficiencies, but it also leads to opportunities for companies like MHP to acquire communities and effectively operate those communities. And from an investor standpoint, that should represent a portfolio that would be attractive to invest in.
Absolutely. And I think you pointed out the whole issue of Sam Zell. He started as a manufactured housing developer, and then later in the commercial real estate became a billionaire. And of course, if Warren Buffett's into it, there must be something going on there too, Bill.
Exactly.
So that's great. That's really great. Well, this has been a great discussion. We learned a lot about manufactured housing and how it can be part of a portfolio, maybe the illiquid part to get better return, but nonetheless an integral part of a portfolio. So I would guide all our investors and listeners today that if they're interested in learning more about those programs, certainly these programs are offered through boutique investment firms like Four-Star. We have manufactured housing programs on our platform as well. Not all firms do, however, so you'd have to talk to your individual financial advisor. But if you're interested in learning more about that, you can give us a call for sure. But make sure that you review everything. Make sure, of course, that this is the right kind of investment for you, that you understand whatever risks there are and the opportunities that are there as well, and it fits in right for your portfolio. But it could be a great category and one that a lot of folks don't know a lot about. So thank you, Bill, for sharing this knowledge with us. And I think we'll pretty much leave it there for the day. And thanks again for being with us.
My pleasure, Brian. Thanks again for having me.
All right, everybody. And we'll be back again with another episode of today's Market Explained, a Four-Star media event, as I like to say. And it's getting cold out there, so everybody stay warm. And we'll be back with another episode very shortly. Thanks, everybody, today.